Hello, and welcome to Beyond the Deal, the show where we go deeper than the numbers and we talk about the tips and tricks that lead to success in life and business. Now, today on the show, we have an absolute masterclass in asset management. So, if you've ever been considering asset management as your role in a general partnership, in a multifamily syndication, this is an episode that you just do not want to miss. My guest today is Cyndee Harding. If you remember the episode a couple weeks back, we had her son Tyler Harding on the show, but she is the maternal matriarch of the Harding family and the high caliber multifamily investment company. So please tune in and enjoy this masterclass on asset management. Let's get into it. All right, Cyndee Harding, welcome to the show.
Thank you so much.
Yeah, we had Tyler on just a couple weeks ago, so we're happy to get the other side of the equation, make it a family affair. So for our guests who maybe didn't tune into Tyler's episode, why don't you tell us what you got going on in life right
Okay, I'm Cyndee Harding, and I am the CF and the asset manager with High Caliber Multifamily. We also have High Caliber Asset Management. So Tyler is my son, and he does the underwriting. And then Rick is another son, and he does asset management with me. He is the director of operations. And then we have Lynn, who is my darling, and he's our financier. So he makes sure we're all moving forward. So yeah, we're just a family owned and run business. We, buy, maintain, and then sell multifamily assets.
Awesome. And before you got, let's take things a little bit back to the beginning. Why multifamily? How'd you get into it? And how did you make it all a family affair?
Well, I was an accountant for about 25 years, so numbers are really my thing. And Tyler was renting an apartment with a friend, and they got to thinking that they should buy a house. And then they could sell the house and then buy another house. And so they had come up with this strategy of how they could pay it off in 15 years and just keep, pulling equity out and buying more houses. So fix and flip. So he approached his dad and said, I have this great idea. And so we sat down and he presented it all. And Lynn was like, that is a good idea. However, that's going to take way too long. Like, we are not spring chickens. So we need to do this faster. So how can we do this faster? And so Tyler set about trying to find a way to do it faster. And he found multifamily. And so he found a seminar. We went to the seminar, but it really was Tyler that kind of started the whole thing. So we started doing it in the fall of 2017. Then we put an offer in on our very first complex in 2020. So it kind of got put on hold because of COVID. And so we actually closed in March of 2021. And since then, we have acquired 7 more properties. So we have 8 properties. But yeah, it's fun. And I love that it's family. We all are working toward the same goal. And we get along really well as a family. So it kind of makes it a little bit easier. We don't have a lot of conflict. So
awesome. And so you have settled in your role as the asset manager. And I think anybody, we come from the same multifamily community, and I think you are well known within that community as the queen of asset management, right? So why did you settle in on that being your role compared to capital raising or underwriting or whatever? Why did that one suit you the best?
Well, part of it was being an accountant, and I specialized in small businesses. And if you think about it, an apartment complex is a small business. It has its own income, its own expenses, its own deadlines. And so I was very used to running multiple small businesses for owners. And that was my niche, is really being able to work with owners, help them understand what's driving their income, how can they decrease their expenses. So as their accountant, I was also a kind of a business consultant to them. And so I helped them figure some of those things out. And so switch to multifamily was very easy. It's the same thing. We have a property. We need to understand who is renting, who lives in the area that's going to rent in our complex. And then the main philosophy that we have with asset management is we turn a complex into a community. And that's something we might want to dive into in a little bit.
Absolutely. And I do have a very quick aside question because I didn't know about your background specifically with smaller businesses, but buying businesses right now is a very trendy topic. a lot of the syndicators who used to do multifamily and, maybe they got burned or maybe whatever, they see the shiny egg of buying business right now. I mean, have you been tempted?
No.
Or so I love this and I love that answer. So tell us why you're still sticking with multifamily and why you're not jumping into, the hot button topic.
Well, multifamily is a proven concept. It really is, but it's not a get quick rich scheme. So that's what people have to really understand. Our first property was in 2018. This is 2025. So we've had that property for quite a while. Well, no, actually we bought it in 2021. So we've had it like 4 years, and it's just one of those things that you put your time in and you work with it, and you really can be an influence for good in that community. And that's really we want people to have a safe place to live, a clean place to live, a place that they want to call home. And that's really what we strive for. And we do all that through asset management. And it's just a proven concept. If we do those things, it works. Yes, it's a whole system, but it works. And so that's why I'm not tempted. I'm not even interested in buying a business or doing anything different. I love this concept and I know that it works. We've proven it multiple times. We have a very happy investor.
Yeah, well, let's get into it. So, what are your most important right out the gate? You take over an asset. These are the things that I need to get fixed very quickly. And then maybe after that, let's get into some of the sort of smaller things that really make a difference.
Okay. Well, we always have the philosophy from complex to community, which is a very specific way to run an asset. And so the whole idea is people living there now. Typically, when we purchase it, it's distressed, which means the owner hasn't really been paying attention to maintenance, maybe even not being paying attention to renewals or people that are moving out. And so we have an opportunity with some vacancy that we can upgrade units, make them to a premium, be able to raise the rents some. But what we really want is we want people to feel like where they live is home. And it affects your bottom dollar. I call it the 3 R's, because we have our renewal rate, our percentage is very high. We do activities every month at our properties. In fact, we do 2. We do one that is a pay on time incentive. So that basically encourages people to pay on time, whatever the due date is. And sometimes it's very simple pay on time, like a pizza party, or it might be a $25 gift card. You get entered into a drawing to get this gift card. Sometimes they're significant. One of the ones that we did that was significant was we did backpacks with school supplies. If you think about it, when you have this community and school's getting ready to start, it's expensive. Starting up, getting all those things, and every kid wants a new backpack. No one wants to go with the one from last year. So what we did is we offered that as a pay on time incentive. We didn't want residents to have to choose between, do I get my kid a backpack and the things that they need for school, or do I pay my rent? We wanted to take that off the table. And so we had that if they paid on time, they were able to come in, get the backpack. We did 60 backpacks. I mean, wow. Think about that, and it was over 4 communities, because we have 4 communities that are pretty close together in one town. So we did it across all 4 communities. That incentive really did work. Pizza and pay, not always, but that was one that definitely worked. And then we do an event every month. And what we are wanting is our residents to know each other, because what that does is that helps us with renewals. That's the first R. People love where they live. We have maintenances to be done within 24 hours. If it's not done within 24 hours, it's because we need a part or I need an explanation. So, it's just one of those things. We just take care of it. So our maintenance is frequently taken care of. If you're getting a renewal letter and they're going to raise your rent and you're sitting on the couch and you hear your kitchen faucet dripping, you're like, I don't know if I want to sign this. This drives me crazy. I can't stand that faucet. So we want to take that out of there. There's no choice on that. Maintenance is taken care of. They know that we have got them covered. So that helps us with renewals. The other R is referrals, because people will run promos and we'll say, pick your neighbor. Like, that's the name of the promo, pick your neighbor. And so when we have these community events, whether it's a big pool party or a movie night or a Super Bowl party, we tell them, invite your friends. And so we know we're going to have residents and their friends, because we want them to see, hey, this is a great place to live. These are the things that we do. And it really helps encourage people if they're thinking about moving. They've already been to our community. They've already seen our amenities. They've already seen our floor plan because their friends live there. So that's the second R. And then the third R is just returns. The returns that we get, our NOI is higher, our cash flow is higher because we're constantly being able to fill the units, people are renewing. It's just the whole community itself moves. And then we also want to make the property an economic driver in that community. So we buy everything local if we can. So we hire local landscapers. When we do a big pool party at Memorial Day. That's when the pool opens. So it's an official opening. Everyone knows the pool is open. But it's also, if you think about it, it's graduation, high school graduation. And so whatever high school that property is in, we go to a local bakery and we have them make a cake in the colors of that high school that just says, "Congratulations, seniors." And we have that cake at the pool party. And if you think about it, there are probably some people that don't get any kind of celebration when they graduate. So at least they know that we're excited for them, that they have graduated, and that we're recognizing them, that they've accomplished this. So we try really hard to be involved, not only with them, but have the community itself, the apartment, involved in the community. So
That's fantastic. I mean, what I'm hearing a lot of is putting yourselves in the shoes of the tenant and thinking about the tenant experience, right? Because I think a lot of landlords, they're detached. It's not personal to them. It's, why isn't this full? Why aren't they paying their rent on time? But you're not thinking about, what is it about your property that actually makes them want to stay? How do I create this sense of community that makes them not want to leave? Because moving sucks. Anybody who's ever moved knows that moving sucks,
yes,
right? And so, yeah, at the end of the year, at the end of the lease, maybe they have an option where it's like, you can stay, but your rent's going to be $20 more for the following year a month, right? And that's fine. Most people are happy to take that if they like the community that they live in, if they feel a sense of community, if they feel like they know their neighbors, if they feel they're safe. I don't know if you guys have ever done this, but one of our favorite little asset management tips is that we like to paint murals on all of our properties. And so, yeah, you can take that one to the bank. It's everybody wants an Instagrammable moment these days, right? So a lot of times it's like the angel wings behind them or something like
yes.
that, hashtag at whatever the property is on their Instagram page, and little things like that go a long way. So that's my little asset management tip. But what maybe are some of these like really minute things that make the big difference? I know you mentioned the parties, but what are some little tips that really take a place to?
Yeah, one of the things that we
Yeah.
do is we try to shift the perception of the leasing office, because most residents look at the leasing office kind of like the principal's office. They only go there when they can't pay their rent or they have some sort of maintenance issue that is not getting handled. And so what we do, because we have 2 events every month, our on-site really knows the residents. She knows their children, or he knows their children. And what happens is that really does create that sense of community. So we encourage our on-sites to always know the children's names. They all have snacks, in the leasing office, and the kids come in and they will talk about what they're doing at school. So we want to shift that perception where the leasing office is the principal's office, where the leasing office is your advocate. This is the person that is going to go to bat for you, that's going to say, okay. And we knew that we had achieved a complex to community when one of my on-sites, we've had this asset for 3 years. She told me about 6 months ago that she had a resident come in and say, sit down with her and just say, "I'm going to be late paying my rent. I didn't want you to have to call me. I just wanted to let you know I'm going to pay my rent. This is the date I'm going to pay it." It wasn't even late yet, but I congratulated my on-site so hard, because I'm like, that is what we want, because they know that you're their advocate, that you're going to say, okay, she didn't pay her rent, but she will. And this is the date she's going to pay it. And I know she will because she came in and talked to me about it. I didn't have to chase her down, didn't have to knock her door, didn't have to leave a note. I already know. And so I think shifting that a little bit with that, and there's lots of ways to do it. Most of our assets have pools. And so we buy the little Otter Pops and have the on-sites keep it in the freezer, in the leasing office. And so if there is a group at the pool, we're like, please take, the Otter Pops and go out and, give them to all the kids, give them to all the adults. And so they're always in the summer passing out popsicles. Sometimes we'll just have cupcakes, like come by the office. We have one that does a birthday party every month. For anyone that has a birthday in that month, they get a text saying, come to the leasing office on this day. It's like the 3rd Thursday or something of every month. And come to the leasing office and please pick up your cupcake or pick up your piece of cake. And so we celebrate their birthday every month. So I think doing just those little things where people know that, you are recognized, you're heard, and we do want to know what you want to do. We send out polls. If we're getting ready to do some sort of CapEx, we'll send a poll out. Would you be interested in this or this? So that we're providing the amenities that they want. The other thing we did is I knew we had made it to a community at this asset when we had a Friendsgiving for Thanksgiving. The on-site was talking with me and said, she'd been there a couple of years, and she said, most of the people here don't go anywhere for Thanksgiving. They don't have any family, and they just stay here. And she said, what do you think about doing a Friendsgiving? And I said, I would love that. I said, we will provide like a turkey and a ham if you want to, and all the paper products. And then if you want to have people come and bring their favorite Thanksgiving dish and then do a Friendsgiving. And she did. And it was very successful. And people were so happy that they had a place to go. So I just think being aware of like, who is your resident? I think that really is the biggest thing, is looking at who lives here and how can we meet their needs. And as long as we are meeting their needs and really being there for them and creating a space for them, they'll stay and they want to be there. Yeah. And they take good care of the property. We do not have vandalism or any of those kind of issues.
Hey, really quick, I hope you're enjoying this episode. I just wanted to stop for a second and thank our sponsor, which is me. Nimble Capital Group is my boutique investment firm where we help passive investors access deals built for cash flow, equity growth, and powerful tax benefits. And if you think you've ever wanted to learn how to raise capital and become a GP yourself, I coach a select group of students each month, most of whom will raise over $500,000 within their first 60 days. So check the show notes in the description below to book a call. I'll see you there. Well, so let's zoom out for a second from a macro perspective, because what I'm hearing is a lot based around activities from the on-site, from the leasing office. So what kind of things, if you were looking at a deal and you said this property doesn't have a leasing office, it might be too small to create a sense of community, what sort of things might turn you off from actually getting into a deal in the first place from an asset management perspective?
Well, a small deal, actually, it's very hard. I like to have at least 100 units so that we can have one inside and one outside person. Because if you're trying to contract for smaller, it does get very expensive. So from an asset management, I like at least 100. That's just to maintain payroll staff. And I do look at the amenities, but I don't look at them like they don't have this or they do have this. I just look to see what is it, and then what can we do to improve upon it. Because most places have a pool, but if they don't have a pool, what can we do? And so we always want to create that gathering space. So I always look for that. And sometimes we'll turn all kinds of, like we have a tennis court turn into a pickleball. We had a big space that became a playground. So we're always just looking at what can we do that will bring residents in. And it's hard to measure your ROI on that, like on the playground. That's really hard. Like, what is our return on the playground? I don't know, but I do know that it is the only one in that town that's a really big playground. It's very modern and has lots of different things going on. You also can see it from the road. We've had people stop just to come in and see, like they're looking at apartments and they'll stop because they see the playground and because of where it's located. So that's like a big balloon or a sign, hanging out there saying, hey, we got this great playground. And the other is when they were putting the playground together, the kids that live there sat up on a hill. Every day they watched the people put the playground together. The on-site would sneak out and take pictures and send them to me. And every day more and more kids would come. And so the day it opened, I told them they had to have it open by the day they got out of school for Christmas break. So it was like in December, the middle of December, and they had it ready. So the day the kids did not have school, they had a playground to go to. And I know those parents were loving me, whether they knew me or not, because they had a place to go. So I'm always looking at what can we do to improve upon this. So I do look at the numbers, like we want to make sure it's something that we can make money at, but I also look at it in the light of how can we increase the value of this complex, make it a community, and have people love living there.
Yeah. And speaking from personal experience, and I'm sure you can relate to this as well, as owners, the difference between us having a good deal and really smashing it out of the park is kind of the difference between like 92 and 95% occupancy,
yeah.
Right? But your property management company is really not incentived anymore if that 3% doesn't mean anything to them, right?
Correct.
So for us, it's what can we do as owners to really keep it full? That's when you smash it out of the park.
We honor
So
our on-sites too. We always
yeah,
send flowers or balloons or something on their birthday. So I always make sure that I get their birth dates, that I send that from the ownership so they know that we appreciate them. And then always on our PM calls, I always ask them, is there anything that we can do to support you? So that's one of the things. And they really think about that. It's not like they just say no. They will get pause. And then I've had some that they know I'm going to ask that. And so at the end of the call, they've been waiting and then they're like, yes, this is what we need. And so I don't always say yes or no. I usually say I need to talk to the GPs because that's my role, is to go between property management and ownership. So I said, well, let me take that to the GPs and I'll get back with you. And I appreciate the things that they bring to me because, they're our boots on the ground. They're the ones that are right there in the middle of it. And if there's an issue, we want to know. We want to help solve that.
a good PM can make or break a deal. And
Oh,
I think that's what a lot of people don't really realize about this industry is that as an asset manager, what you really are doing is you're managing the manager.
yes.
And it's not always as simple as a good company and a bad company, because really what it comes down to is the support that your on-site has from their regional. And, you could have a great regional in one state and a terrible regional in another state. And so it's really subjective in that sense. But, aside from sort of asking that question at the end of the calls, what sort of things do you find are most effective for picking a good PM or effectively managing your property management company?
Well, I have about 5 PM companies that I've used. And so I try to usually stay with them. However, the main thing I look for, and I haven't stayed with them on some assets because they do not have a footprint in that town. So really what I'm looking at is what is their footprint, because that helps us, offset some of our cost because we can buy in volume and do things with other properties. And then I am slow to hire, quick to fire. When I start getting a little sense like this, I don't think this is going to work. It's usually 3 months and then I am there and we are switching. I've already found someone else and we are moving forward. So once I get that first little nag, I'm like, I need to look into this. And I just start digging in. But before we hire them, like we ask them, what other properties do you have? We go and look at their Google reviews and we, look at the properties that they're managing now. How is that? We're not going to know the financials, but we're going to be able to tell from the reviews, like, are they taking care of the maintenance? Are the residents happy? That helps us determine, is this going to be a good fit? So reputation is huge.
Yeah, absolutely. We've actually, you mentioned there, like, what kind of presence do they have in a certain market? We've actually chosen not to go into certain markets because our PM of choice wasn't available in those markets. And there have been other markets actually where they have offered to expand with us into that market. And
Yes.
that's been pretty successful for us as well. And recently, our favorite property management company, at the time of this call, they've just been acquired by a different one that we don't like. So waiting to see how all of that shakes out, right? But yeah, I assume this hasn't all been a sunshine and rainbows process for you, though. So can you tell us maybe about a major setback or a turning moment that you had with asset management, or a real learning moment?
It was our very first deal, which, your first deal is full of learning curves, but this one we were quite unprepared for. You talk about owners and how we want our residents to know that we care about them. And this property that we were purchasing had had the same owner for 40 years. So we're talking a long time. And a lot of the residents had lived there. They didn't have a high turnover. They had long-term residents. And we were scheduled to close and we had a 2-week extension. So we chose to use the extension. Unbeknownst to us, the owner turned off power to all public area in the complex. We're talking lights in the stairwells to get up to your second story. There was no light. Residents were having to use flashlights. The leasing office was closed for 2 weeks because they had no power. The pool had no power. The parking lot had no lights. And we did not know this until we actually purchased the property and were on site the day that we signed papers. The residents were like, hey, we don't have any lights at night. And we're like, what? So we immediately, got a hold of Home Depot to, get generators to bring in those big lights. And I mean, we had to really scramble. And the seller, he chose to sell it, but he was not a nice man. And I'm thinking these poor people have lived there for so long, and this is what he's doing to them. And he did it on purpose. And basically, when they talked to the on-site, who lived on site, she knew it was happening. She had my phone number, but she never let us know because we were not retaining her because we were bringing in another property management. So she was pissed at us. And so she just kept saying, oh, I don't know, it's the new owners. It's the new owners. So we had a huge hill to climb when we took over that property because that was all blamed on us. That was a really big to overcome. But, we did it. They immediately put out letters saying new management. And this was like on a Friday. So the next Friday we had a big open house in the leasing office, come by, meet the new manager, but we overcome it. And it's like one of our most stable properties that we have. But yeah, that was really surprising to me. And because it was our first deal, didn't even know that was a possibility or, now I make sure like, okay, everything's good. We've got our deposits ready to switch everything over and we got to get all that lined up beforehand because 2 weeks.
Wow.
Yeah.
I mean, it's all people at the end of the day, whether you're talking the tenants or the staff that you may or may not retain, the power of people is really the story of asset management.
It is. The good on-site though is great. And a regional is even better because a regional keeps the pulse on what's going on.
All right. So you have acquired 7-8 assets now. You're managing hundreds and hundreds of units of multifamily. You're the life of an entrepreneur. How do you keep it all together? What are you doing right now to make sure that you stay sane? You don't get properties mixed up. You don't get tenants mixed up, and everything is nice and checked out.
Well, first off, you're making the assumption that I am sane, which might be a mistake on your part. You could probably poll my family and get a different answer. I am an entrepreneur and unfortunately I am a workaholic. So I do work a lot. And when I'm not working, I'm thinking about working. So I might as well work. But I honestly, I realize that it's my family, but I have a great support system and everybody pitches in. We do whatever needs to be done to get it done. And I just know that I have people that I can rely on. And then, you partner with people that you can rely on. And that has really shifted over the years. Like I'm very picky about, who I'm working with and what I'm doing. And I want to make sure that our values are aligned because I've been with some partnerships that our values weren't aligned and that was not a good partnership. So I just, over time, I think as you get older, maybe you get a little wiser that you're just careful, like where you spend your energy. And I love asset management. I love the complexes turning into a community. And that's where I want to put my energy and I want to put it, with people that are going to support me and, help keep me somewhat sane.
Beautiful. Power of community. We're back at it again.
Yes. Yep.
All right. Well, thank you so much for being here. It's been an absolute blast. I know our listeners will get a ton out of this. If any of them have ever been considering asset management, I can't imagine a more valuable episode for them. So thank you for that. For anybody who wants to get a hold of you, what's the best way to do so?
You can just go to our website. It's multifamilyhighcaliber.com and my calendar's in there. Everyone's calendar's in there. So if you have questions about underwriting, you can talk to Tyler. Asset management, you can talk to me, you can talk to Laura. Monies, talk to Dad. So yeah, I love talking to people that are considering asset management. I think there is so much that can be learned doing it and so many ways people can benefit from it.
Absolutely. All right. Thank you so much for being here.
You're welcome.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.